What is happening, people? It's Luna Mai yet again. Today is our technical analysis episode. I am doing this on my personal account because I haven't done it in a few weeks and I don't want to lose this skill. So I'm going to update this every week and it's going to be just a quick log for myself. If you enjoy this, give it a like, subscribe, comment, give me your ideas, stuff like that. I've got my COT reports there as well, so I'll link that in the description. I've never actually uploaded properly onto YouTube before as a series. It's just it's for myself in particular, just to keep up with my skill because I'm not really utilizing this skill right now. I've got an EA, which makes me money or should make me money, and yeah, I should be doing this. But I do like doing these breakdowns, and I basically do trade gold, and I look at the dollar index most, but I don't look at the other currency pairs. So I always need to keep up to date, and I feel that this is the best way to do that. So let's get into this. Dollar index, I am looking upwards, of course, because over the past, I've been preaching this on Trader Central that we will this is just massive accumulation. It's so blatant. Don't know if you didn't see that. It's just a big old accumulation. Everyone was pricing in an up move. No one was pricing in a down move because the price didn't go down. So this is just a blatant, always, you can just see what the news will do. We can expect the Fed to do X via the price reacting. So the Fed over here, I think the Fed came in and spoke around this area. And for the whole few months leading up to that particular meeting in around May, price was decreasing. It was pricing in a down move, and the Fed on the day said they weren't going to remove their monetary expansionist policy. But then, of course, in the lead up to Thursday's FOMC, we saw price not going down but ranging. That was based on rising inflation and thus the incentive for the Fed to contract their monetary policy, reduce the amount of US dollars in the market, and then, when you reduce the amount of US dollars in the market, it's going to increase the price of the dollars, and you can see what happened there. So we are now, I believe, going to get, I think 2022, they said is the earliest they'll come and intervene in markets, which is not too far away. Or I wouldn't say that, it was about 6 months. But that's when they're doing that, which is interesting. So let's see about that. But in the meantime, it looks like we are going upwards on the dollar index, and we could, in fact, this is on the monthly. Let's go on a monthly, sorry. And you see this trend line over here at 110, price of 110. We could potentially hit that with this current move. Could be a massive impulse upwards, but it depends. I don't think that's going to come into fruition, mainly because the Fed will be printing more. I have a hunch that the Fed is going to print more in the 2020s, and by the time we reach 110, that will be around 2025, which is quite a long time away. So I wouldn't expect us to ever reach 110 in the next decade, which is interesting. Nonetheless, let's get into this. So where are we going to enter? That's the thing. So I've marked out the supply zone, and I can't really say for sure when we're going to take a decrease or take a pullback. I would like to jump on this to get some buys as well. I missed this. I know I was longing USD Swiss franc, but I didn't get into this, which is nice, which is bad. I don't care. It is what it is. But I'm looking for a retracement around this area. We could, worst case scenario, come back down here, but also there is this space to be filled. I always like to say there's a space to be filled. Might not feel, sorry. But this is the most highly likely area to come into, for price to come into. So I'm looking at buys around 91.5 towards 92.5. So that 100 pip range on the dollar index. So anyways, it's looking bullish. I'm looking upwards towards overall targets. We've got that double bottom here. Overall target currently is 94/95 on this current move. But of course, on the monthly, you can see that, or this is the weekly, sorry. you can see that there is space to be filled over here before we go upwards. Really nice move though, I really like it. And yeah, there was a thing about how Forex isn't actually paying very well, and that's what you see with the exodus of retail Forex traders going to gold and indices, because gold and indices pay well. But as you can see, the past few days, we can see that Forex has been doing incredibly well, very volatile, very nice to make money on, and I'm sure a lot of people have made money and are kind of coming back to Forex, which could aid liquidity going forward. We'll just have to see about that. But anyways, let's go to Aussie dollar. And this is weekly, of course. And yeah, the main game of this is we're looking for retracements to go short further. And that's the overall target. Of course, this is a regime change, shout to Manum, regime change in the market. So we had that massive bull run coming out of the Fed's announcements in March 2020 on monetary stimulus. And that's been buoying the market for the past year. But now it seems that we're getting a regime change. Inflation is coming up and the Fed is looking to reduce their monetary expansion. And as a result, that's called quantitative tightening. There is a taper tantrum, that's what they call it. And people are selling off. And now, yeah, we're looking for things. So anyways, I said this a few weeks ago. I didn't upload it here. I might upload it. I don't know. I can't bother. But standard business, it was going downwards. It was accumulating. And you see this range. This range has been accumulating for months. And that move will be sustained for longer. With shorts are faster than longs, which means that you see this is a long, this is a trend, uptrend. Downtrends are faster because for some reason, or just gravity, I think it's gravity. People have this gravity bias, natural laws of dynamics bias and stuff like that. And price falls faster than it rises. That's the overall rule. So if we're going to get this kind of move, I think it will happen over the next week, 2 weeks. Could even come down there. I don't know. I don't expect that to happen. That's too big of a move. And for the Australian or Royal Bank of Australia to see that type of move, that's not very good. That could cause panic, cause a recession. You never know. So anyways, I'm looking at maybe a retracement around this area before going upwards. So we got this point of interest as well. Sorry, let me just get that there. So we have a point of interest over here. Just pull it over there. Let's make this even. So here is a point of interest. I think that's the overall target for now. Royal Bank of Australia loves this because, of course, a cheaper Aussie is good for exports, and exports are good for the economy. So I'm looking at a retracement. There is also a few orders over here, so I can expect us to reach this level. I'm going to mark that. See that red line? That's where you would get a buy. And I would wait for price action to show me that price is reversing, and I would look to enter a buy around this region over here. If we're going upwards, then once we get that upward impulse, I would sell, and then I would look at how price is doing. Is it going to continue upwards, or is it most likely going to come down and test the lows again before either continuing upwards or continuing its downtrend? So that's the idea behind this. Some simple wick off over there. As you can see, of course, we are in that down move and we haven't actually made the AR and SC yet. And I expect us to, because I've had this for years. So anyways, I expect the SC to come over here. Of course, here's the selling climate. Here's the spike in volume, but we saw that down move. We're yet to complete the down move. So I'm expecting the SC to come over here and the AR, is going to come. Let me just see. Probably around over here, 0.73 or 753, sorry. And that is Aussie dollar. So that's gang shit. Come on. Let's go use New Zealand dollar. And yeah, so as expected, this was a few weeks ago. I made this markup. And we are now at support. So everyone was rooting for the New Zealand dollar because of New Zealand's doing really well. etc., etc. But it looks like we are now facing, yeah, of course, we had this downtrend, this 3 days worth of volatility, incredible stuff, and 3% over the 3 days. But now this looks like a nice buying zone at the bottom of this selling climax weeks ago, months ago. So I'd look for buys over here. I think, I think this is a bit. I think this is a perfect opportunity to buy. We're just below, and we're just reaching these wicks as well. That's just a point of interest as well. These wicks, just a nice little bit of supply, and yeah, I can't really say too much about that. I'm looking to enter. I would look to enter around this area here. Just of course, price action. Wait for a daily bullish candle, and see about that. But that's New Zealand dollar, US dollar, aka Kiwi. GBP USD. Pound is a Mazza. Of course, it's kind of expected as well. I was calling that wick fill on the weekly, and we did it, of course, because we were in momentum. But it looks like as soon as that hit the 2018 high, we were downwards on the week. And it looks like, I think on the weekly, the momentum is still there for downtrend, and I can expect us to come into this zone. I would enter around here, just below. Pardon me, this is my own YouTube channel, so I can do that. But here is my entry, and I would look for entries around here. So price action reversals, bullish engulfing, just a simple order block, and we're looking for reversals in this range before continuing upwards, or making a automatic range and then continuing the decline. So this is a massive bearish candle. I think could be potentially oversold, which would mean that we could get a bullish candle. And the fact that we didn't break this area, no, we did actually. We broke this candle, which is a sign that we could continue downwards, but it's only very marginal. But this is the weekly candle. But yeah, so I would look at bullish breaker. We've broken it, then come up a little bit before continuing downwards. I would expect a continuation of a range in this area before getting more confirmation for the downside, as everyone prices in a contractionary monetary policy and the markets catch up with the pound and their printing. So anyways, that's probably doesn't make any sense, but yeah, looking to buy over here. Simple stuff. Euro USD and Euro, straightforward as well. So we're looking at this zone over here, but this zone as well, it looks like we are here. Yeah, so here is our trend line. We're in a trend. Line chart would be good, and you'll see that we'll reach this area. Let me just mark up. All right. We'll reach this area, bounce it before going upwards, maybe something like that. I don't know. I don't think so. I don't think that will happen. I think we'll just come down. There is incredibly oversold, and you saw that was an entry over there. I kind of moved it on the day. I moved it up to 1.215, but fuck it, doesn't matter. So looking for buys around this area. So I'll just mark up something like that to come down before getting an AR, and then coming down into this zone to get more buys to go upwards or either going downwards. So that is Euro USD. You have listened to me think, which is interesting. But here's Swissy. We are in this uptrend now, and this could be the higher low. The higher low for a higher high on the weekly. Very interesting stuff. And if you were to reverse everything on, like, this is USD Euro, if you were to reverse Euro USD, you'd get a pretty much similar chart, and you can see that there is, like, if you were to look at it like this, you would see that it makes sense with everything else. So you would get that uptrend, and this is the target over here. So the target would be the higher high of this low high, higher low, higher high trend. Easy. But USD Swiss franc, similar situation. we're looking to go higher over there, but immediate target is of course this resistance over here slash supply, or sorry, was it, I don't know, supply, yeah, supply, and a bounce off that would be most likely and very equitable for everyone. So I'm looking to go there, but of course Swiss is what do you call it, manipulated by the Bank of Switzerland. I don't know what the central bank is called, Reserve Bank of Switzerland. Oh, no, it's not that, but yeah, so could be a bit choppy, but we'll have to see. And then finally, sorry for the unconscientiousness, but weekly on gold is looking downwards, very bearish. We saw that resistance being respected at 1900. I called a few weeks back that we would rally up like this. This whole thing arguably was seen with these candles over here. So you saw this up move. This was this was the first impulse of this, after this trend. The first impulse, retracement, a second impulse, and then you saw how people were trying to stop this or sell this. And then what usually happens after this sell-off, sell-off, but a resistance to this uptrend is a surge in price, it's wick off, and a big drop, then a comeback just to test everything, and then a continue, or just a sell-off. That's pretty much wick off. I could teach you a lot, but I don't have enough time. I would say can't bother. But anyways, here we are at supply. Or no, that's not supply. That's demand, and you can see there's a lot of wicks over here, so we can expect a lot of orders. So I would start looking for entries around this lower candle over here to get that snipe. Yeah, over here slash 1755, 1750, 1750 psychological. Higher chance of getting orders over there before going upwards or even ranging for a little bit. You can see that here is arguably a selling climax. Here is an automatic range, and then we got that sell. So we are arguably in a buying area. I would look lower just to be safe at 1755 slash 1750 before entering this to go higher, or just to enter yourself into a range. Of course, range after these big sell-offs is highly likely. But yeah, let's look at the weekly. And I think the music has obviously stopped playing with gold. We got that big move up, but that was reversed entirely. And that could potentially be, I think we're going to range in this area. Yeah, I can't really say too much about that. Cot reports are there. Let me see. Yeah, so with the cot report, didn't update this week. Kind of annoying. Doesn't matter. But you can see that net positions on the dollar amongst non-commercials are bullish, but only very marginally. And USD commercials are bearish, most are short. But I would expect us to continue upwards on the dollar. When this starts to get to like 99% or like really high levels of shorts, then I would start shorting the dollar. But for now, it doesn't matter. And Aussie dollar overall pretty short. That's pretty cool actually. Didn't realize that. But anyways, so look, you see that big move there? That was forecast a few weeks ago, because this is from this whole move was only 3 days, and this cot report has been last updated on the 11th, and that was in the 11th. The last 3 days were the 15th, 16th, 17th, 18th. So kind of predicted everything. I think same with, no it didn't, but here's New Zealand dollar. You can see why I said that everyone is bullish on this. Well, not everyone. Net positions are positive for the past ages, and yeah, commercials there. And then with pound, similar thing. Euro, pretty similar as well. Overall bullish, and the chart is saying so as well. We're still in that move, but we could be just making a a higher low, no, sorry, lower high, pardon, before going lower. Maybe, have to see. Wait for more confirmation. Charts work the same on COT, Swiss franc, marginal, and gold. What's happened? Decrease. And you can see that there. So that could potentially go into this area. So the net positions going into 100,000 again. So we'll have to see what happens with that. And that has been your boy on the mic yet again. I've spoken for way too long. I've got a lot of stuff to do today, but without further ado, thank you for listening, guys, and I will see you soon. Cheers.